Greetings. Today is Friday, September 6, 2024, and this is our monthly market monologue. We are going to review the stock and bond markets for the month of August, as well as the first week of trading in September. That said, before diving in, I would be remiss if I didn't introduce Hicks Associates Wealth Management to those of you who might be on this channel for the first time. You can find more information about us at hicks-associates.com, but in general, I would tell you that we serve individuals and families by serving as their chief investment officer, proactively managing their portfolio in a fee-based fiduciary capacity. Specifically, our asset management approach is designed to minimize drawdowns while capturing upside momentum. Again, go to hicks-associates.com to learn more. If you'd like to chat with us, hit one of those big blue buttons and we'll be happy to chat. That said, let's dive in. On the screen right now is the S&P 500 and how it performed. Ended up being positive about 3.7%. If we add in the NASDAQ, there's the NASDAQ. We have the small cap index, the Russell 2000, up about 1.6%. Adding in some bonds, that is the 7 to 10 year bond, IEF. Adding in TLT, the longer term 20-year bonds, also positive for the month, about 1.25. And then we have the aggregate bond index, AGG, again positive for about 1%. So that said, the month of August started off in pretty violent fashion. Let's take a look at that. Now on the screen we have the S&P 500. This is a daily candle chart just to demonstrate how volatile the month started. Specifically, that is the last trading day of July 31st. Obviously, this means this first trading day of August was pretty ugly, going all the way down to this 50-day moving average. The market continued to move lower until August 5th. We had a little bit of a bottom there, and you can see this sharp rally off of that August 5th low. Top to bottom, it was approximately about an 8% pullback, fairly violent, fairly quickly, but the market rallied quickly. Moving on to the monthly candle chart. Again, this candle here is the month of August. Remember, the way that you read these candle charts is a white candle. That means that the market or that index or that stock or whatever, it started the month at that line. It ended at the top of that body. But this long wick, that is demonstrating the intra-month volatility. So we started the month here, we went all the way down and then rallied back. So a nice strong rally to finish the month, but August was certainly volatile. Back on the daily chart, this is really what we're looking at. A very quick, sharp decline and a fairly strong rally into what some would call a handle, a sideways consolidation period, which we thought was looking pretty good for September. Despite the fact that September is historically a very volatile month, I like the fact that August ended in this sideways consolidation pattern, ending the month at the month's high. So that is a good sign, but now we know how the first week of September started, and we'll come back to that in a minute. Moving on, we now have RSP on the screen. RSP is the equal weight version of the S&P 500. Again, you see this intra-month volatility, but RSP also closed the month of August at the high for the month, which is a very good sign. Putting the two side by side, the cap-weighted, the traditional cap-weighted S&P 500 on the left, the equal weight S&P 500 on the right. And again, both of them you see closed at the high for the month, but we did see that intra-month volatility. So good signs for the month of August in terms of how we close. However, the NASDAQ Composite Index didn't have as strong of a close. Again, you see this massive intra-month volatility ending the month about the same spot where it started. That's the NASDAQ. Then we take a look at the Russell 3000 as a recap. The Russell 3000 is one of the indexes that we use, or the ETFs that we use to really help us to measure the market's breadth. Again, we see the same thing. We started the month here, a lot of inter-month volatility, ended up closing towards the very close to the high for the month. A very good sign for the broader market. It's not just the S&P 500. The Russell 3000 was able to close pretty strong. That's a good sign. Now, let's move on and talk a little bit about this advanced decline line. Again, we have the S&P 500 and the top pane. We have the advanced decline line in the bottom. Remember, advanced decline line is simply the advancing stocks minus the declining stocks. That's where you come up with this advanced decline line. And you can see previously we've shown this divergence. This would be a negative, or some would call a bearish divergence here, because you have the S&P 500 advancing, but you see the advanced decline line actually going down. Well, what happened towards the end of the month of August? You have the S&P 500 not quite, but almost at this high here. But what happened to the advanced decline line? It rocketed through that, and the advanced decline line closed the month at an all-time high. That is a very good sign. Because, as you know, one of the things that we've talked about ad nauseum is just how thin the market's participation was. We have the Magnificent Seven, etc. They've been doing so great. Well, we really need to see everybody else starting to play ball as well. And that advanced decline line for the S&P 500 was indeed a very good sign for the end of August. Now, let's take a look at the same thing, but now we'll look at the advanced decline line for the Russell 3000. So I've drawn some notations here on the top to show, again, Russell 3000 closed approximately at the same high before, but what happened on the advanced decline line? That advanced through. Again, very good sign on the advanced decline line for both the Russell 3000 as well as the S&P 500. Moving on, we'll take a look at the percent of stocks in the S&P 500 that are above the 200-day moving average. Remember, we talk about the 200-day moving average as a good indication of a long-term trend. 200 days in the stock market is approximately 9 months. Remember, 356 days in the year, but in the stock market, there's 252 trading days. So 200 days is approximately 9 trading months. And so what I want to highlight here is this green line is the 50% line. So in other words, what percent of the S&P 500 is trading above the 200-day moving average? Well, it's been above 50%. So more than half of the S&P 500 has been trading above the 200-day moving average since mid-November of last year. That is a very strong sign of where we're at as a market. So again, very encouraging sign here. So we'll land the plane with a quick review on the daily candle chart. We did really like how August wrapped up. A pretty negative start to the month, but we like the rally, and we definitely like how August closed. A very strong close with a lot of positive signs underneath the surface, as we've already talked about. The first 3 trading days in September, however, not so fun. What's interesting is, look at this red line. This red line, remember, is the 50-day moving average. And so this big black candle is the first trading day after Labor Day. So the first trading day of September, what happened? We traded down a pretty negative day, but that 50-day certain moving average served as support, and we rallied before the close just a little bit off of that. And then Wednesday and Thursday, again, that 50-day moving average, really important level. We started on Wednesday at that level and came off of it just a little bit. And then Thursday, we basically wrapped up just right at it, or right under it. Earlier this morning, the latest jobs report came out, and the market is kind of digesting that right now. As I'm recording this, the market is relatively flat, oscillating between positive and negative. The jobs report was, I think, a little bit worse than expected, but not too bad. And it seems like the market is digesting that as further evidence that the Federal Reserve is indeed going to lower rates. The Federal Reserve will reconvene for their meeting on September 17th and 18th. So we suspect on the 18th is when we will get the official word that they are indeed lowering the interest rate. So between now and the 18th, we would not be surprised if we see a little bit more of intra-market volatility. But the fact that we closed as strong as we did with some of the underlying technicals as strong as they are is really good news. So it'll be interesting to see how that plays out. And hopefully next week I'll shoot a updated video with some economics, and maybe we'll even do one in the coming days about a review of some of the presidential politics in terms of how it relates to the stock market. We'll really leave the politics out of it. Hope you find these videos helpful. If you do, make sure you hit that like button. If you haven't already, hit the subscribe button as well. By all means, feel free to share these videos with your friends, colleagues, family members, etc. We are never too busy. We always have the time to sit down and see if we can't be of service to somebody that you care about. Until next time, thanks for watching. We'll talk to you soon.